Today, we're here to discuss a very interesting real life story, a very quirky, funny story of an investor and the journey, from a professional to an active investor.
He tells me that he has never invested anything in equity markets, zero investment. He doesn't know anything about that. Whenever it gets accumulated, I'll go and buy some gold, or I'll buy a plot of land nearby, so that's been my investments. Because he's buying so many properties, and because he has ended up buying properties out of compulsion rather than a choice. He ended up buying properties at prices which were not very attractive. Since you are earning every month, start with some SIPs.
Correct.
And because he had only 10 lakh rupees annual income, he could only do 50,000 rupees of SIP.
Okay.
If you want to bring efficiency in investing, you need to make sure that that money is available for all the choices which are possible in the investment world.
But what is this affinity of Indians with physical properties? So, still, household assets, 70% lies in physical assets. So,
Yeah.
what is this? Is this emotional affinity? Is this the comfort of seeing gold in your hand and figuring out that, my money is safe? What drives this?
One of the key reasons was that economic shock which the government had in the system, that overnight the 500 and 1,000 rupees notes became illegal tender.
So, talking about this feeling of being wealthy, is it also related to the potential liquidity of the assets that you own?
I think he has some 14 odd crores of wealth now. And this is only through SIPs,
Only
okay?
SIPs.
And he started with 50,000 rupees.
Hello everyone, and welcome to another episode of Beyond Just Returns. I'm your host Upasana Koul, and I have with me the Managing Director of Ladderup Asset Managers, Mr. Raghvendra Nath. And today we're here to discuss a very interesting real life story, a very quirky, funny story of an investor and the journey, from a professional to an active investor. So welcome, Raghvendra sir.
Thank you, Upasana.
Let's start with the story. Tell us about Dr. Gupta, how you met him, and what struck you about his portfolio or his investment at that time when you started with him.
Yeah, so as you said, very interesting actually. And today I picked up this story because I think there's so many lessons to learn for people in this story actually. So Dr. Pankaj Gupta, he is a very close friend of my brother. My brother is also a doctor, so they studied together. This guy is a orthopaedic surgeon, and his hometown falls, en route to my hometown. And so we have known him for many, many years, maybe 20, 25 years. And so, we used to keep meeting him, whenever I'm going to my hometown, we'll stop over, have a cup of coffee with him and then go. And it just so happened that once, my father had to consult him, and we were visiting him anyway on our way to our hometown. And so that's when he said कि भैया मुझे थोड़ा बताओ, आप ये इतना investing करते रहते हो, I don't know anything about it. And so I thought I also kind of said yeah, why not? And then I kind of came back to Mumbai, and because I thought it's just a casual conversation, but he actually followed it up after a couple of weeks, and about how do I start and whatever. And that's when I started inquiring about has he been doing, and which I generally do. The whole idea is that you need to understand or the preference of the person that you're talking to, what is his risk profile, what is his education level, or about the markets and all that, experience in the markets. So it just, he tells me that he has never invested anything in equity markets, zero investment. He doesn't know anything about that. And most of his investments have been in either real estate or in gold, and some bit in FDs. So I asked him why real estate and gold, and he says, no, I can't, because Most of my patients are walk-in clients, and most of them, this is a small town, everybody pays in cash, and this cash keeps getting accumulated at home. And so what do I do with it? I said, no, you don't show it you don't put it in the bank. He says, no, I can't put it in the bank because I only show 10 lakh rupees of annual income.
Wow.
I said, why that? He says, no, my chartered accountant insists that I show only that much. And I said, but why is that? Well, no, every doctor in the town is only showing that much.
Wow.
So it is, so what do I do with the cash? So he says, I'll whenever it gets accumulated, I'll go and buy some gold, or I'll buy a plot of land nearby. So that's been my investments. And so I actually inquired from him that how's been, so if you have so many, you are become a landlord of sorts. What has been the kind of returns? And he says, no, it's not been good because, because he's buying so many properties and because he has ended up buying properties out of compulsion rather than a choice.
Okay.
He ended up buying properties at prices which were not very attractive, and therefore, and he doesn't even know whether this portfolio, what is the value of the portfolio, because especially when you're doing land deals, the price for the seller and the price for the buyers are very different.
Correct.
And the twain don't meet, so it's very easy to go and buy, but the moment you have to sell, you suddenly realize that the actual price is somewhere different, and therefore, it being a completely opaque market, you can never be sure what is the return that you are making. So anyway, so his investments have been were mostly there, and he had no clue of the kind of wealth that he has, and how is he going to liquidate. And it just so happened that 6-8 months down the line, so after our discussion, he started. I told him that, okay, since you are earning every month, start with some SIPs.
Correct.
And because he had only 10 lakh rupees annual income, he could only do 50,000 rupees of SIP.
Okay.
And so we started from there. I said, okay, but I think I remember even in that first conversation, I was telling him that, but why aren't you paying taxes? He says, taxes 30%, such a large amount. So I told him that, when you earn 100, you pay 30 rupees to the government. Anyway, the 30 also you're getting some benefit, by way of road, electricity, this, that, whatever. And that 70, if you were to just put it in a bank account, bank deposit, let's say an FD in a bank, in 3 or 4 years, that 70 will again become 100.
Correct.
Okay. And then for lifetime, you can invest that money wherever you want to. So, that if you want to bring efficiency in investing, you need to make sure that, that money is available for all the choices which are possible in the investment world. And that can only be there when you pay taxes. So don't take tax as an expense. Tax is an opportunity to, make your portfolio more efficient so that it can pick up any choice that it wants.
Correct. But what is this affinity of Indians with physical property? So still household assets, 70% lies in physical assets. So what is this? Is this emotional affinity? Is this the comfort of seeing gold in your hand and figuring out that, my money is safe? What drives this?
So I think, and this, I don't think this is only true for India. It is true for every country where the per capita income is low, where the people are poor. Okay, and because for them, then those physical assets give them sense of comfort and confidence. And it also becomes a mark of a social status. Okay, so let's say if everybody is poor, or everybody is middle class, and I have a bigger house than my neighbor, I get the social status, or if I can give more gold in my daughter's wedding than the other guy, it basically, kind of improves your social status. So it's both social status, the economic uncertainties that people have dealt with in the past. So they want that confirmation that, okay, my wealth is closer to me. I can see and touch and feel that wealth. And that's the reason why there is this overemphasis on physical assets, which probably is changing in the urban centers, in the more people who have, especially salary earners, businessmen, who are employing people and all that, and so that concept is changing quite fast. And then that this unique thing in India that especially professionals and businessmen, small traders, not businessmen, they earn 10 rupees, but they only show that they have 2 rupees of income.
Correct.
So that's another factor of behind the assets, physical assets.
Interesting. So talking about the cash component that you mentioned, especially for servicemen like doctors, demonetization came into play.
Yeah,
right?
that was a big wake-up call,
Correct.
actually. Yeah.
So did it genuinely impact the cash circulation in the industry?
Not really, actually. And I think data has borne that out. It's not I am saying. I think it is funny that whatever was the number of notes printed by RBI and which were in circulation, more came back. So the maths didn't work, actually. Correct. And so the exercise may have had a fantastic intent, but I think the system was too weak and too unstructured to kind of have any outcome. And so it was an exercise in futility. But I think it taught a very big lesson to people, especially people, professionals and doctors and all that, there is, because everybody, of course, in retrospect, when we look at, and most of the people that we talk to, they all kind of somehow managed to put their cash into the system.
Correct.
Whatever they may have used, there are all those stories already there in media on the innovative techniques that people used. Okay, but they were managed to book. But it was a big lesson that if cash is a problem. Okay, and I think that realization has happened, and I think it is also bearing out with the kind of number of returns, income tax returns, which have gone up many-fold in the last 5, 6, 7 years. I think one of the key reasons was that economic shock, which the government had in the system, that overnight the 500 and 1,000 rupees notes became illegal tender instead of legal. And so I think nobody wants to go through that situation again.
Correct.
So that fear is what has pushed people in terms of bringing their starting, to put more and more income and declaring that income and paying taxes on it. And another factor was GST. So what demonetization did for professionals, doctors, lawyers, architects, designers, artists, the GST did for small traders.
Correct.
So I think both these key policy measures, one was a failure, another has been a tremendous success. I'm talking about GST, but even though demonetization was a failure, it taught a big lesson to the community or to population in general.
So what happened to Dr. Mehra? Anything related to demonetization that you remember? What happened during that phase? Was it panic?
No, I think it was because I think if I remember correctly, the relationship, his investing journey started in early parts of 2014. So he was just few months into investing, and when this 8th November happened, and overnight, and he fortunately he didn't have too much cash, but somebody who's dealing with cash on a day-to-day basis, because of his profession, for him it was a big shock, and so from declaring 10 lakh rupees annual income, now at least he's declaring 100% of his income in his income tax returns. So probably his chartered accountant also got a lesson or whatever. I don't know what the other doctors in that city are doing, but at least he has realized that there is no fun in basically leading a life where most of your hard work is getting into inefficient assets, and you never feel wealthy,
Fair.
even though you are working hard.
Correct.
So by financial assets where you can actually see, and the true wealth that you have. Because if you have 100 rupees in financial assets, it's worth 100 rupees, for sure.
Correct.
You can never be sure in fixed assets, let's say land or flat or building, what is the true value of the asset.
So, talking about this feeling of being wealthy, is it also related to the potential liquidity of the assets that you own? And with respect to Mr. Mehra, how
Mr.
was
Gupta,
this?
yeah. Gupta, yeah.
Oh,
Pankaj
no.
Gupta, yeah. Yeah.
So, talking about enjoying your wealth, is it also related to how liquid your assets are? And how was the journey of Mr. Gupta in this scenario?
Yeah, so I think, and this is a very important point, Upasana, that you have raised. The feeling of wealth is being truly wealthy, or feeling of being truly wealthy also comes along somewhere connected with the liquidity. Okay. If I can't spend the wealth that I own, then I will always basically be, doing things lesser than what actually I desired. So let's say if I had all my wealth in gold, which I know that I am not going to sell, then whatever, if and I have very little liquidity, then I'll not be able to buy things or spend on things which I truly cherish. Okay, so if let's say I want to travel business class, but I don't have the money in the bank account to travel business class, I end up traveling only economy. Or I want to travel in air conditioned compartment of a train, but I don't have money to buy the ticket, and therefore I buy maybe in sleeper class or whatever. So, or I want to buy a big car, but I don't have the liquidity. I don't have my income tax returns, because if I buy a Mercedes today for a crore of rupees and I'm declaring 10 lakh rupees of income, I have this fear that income tax department will come knocking on my door.
True.
So I think liquidity plays a very, very important role in feeling wealthy. And I've seen that not only with Dr. Gupta, I've seen it with a lot of clients. As their wealth status has kept on improving, the life choices that they were making have also changed. Over a period of time, and so it's critical that whatever position, I'm not saying that don't buy land or don't buy flat or don't buy gold, but I think having a large proportion of your wealth has to be in liquid assets. And in any case, from a fundamental standpoint, let's understand what is the wealth meant for. Whatever if I am working hard today and accumulating certain wealth, the primary objective has to be to serve me.
True.
In my needs, in my desires, in my lifestyle choices. The primary objective cannot be that my grandchildren should enjoy this wealth. Okay, it cannot be. By default, it may happen. That's another thing. Okay.
True.
So when I'm buying let's say, and I'm investing in assets which are not liquid, my primary objective is not getting solved, which is taking care of myself or allowing me to have those lifestyle choices which I desired. Okay. And I ask this question every time. People, they are votaries of gold everywhere you see. And I ask only one question from them, that in your last 30, 40, 50, 60 years, whatever is your age, have you sold even 1 gram of gold?
True.
And the answer is always no. And I ask this question to my wife, to my everybody, all the women, that have they ever sold? Because the women say gold is fantastic investment. See, gold was 4,000 rupees, now it's become 80,000 rupees, or 6,000 rupees, now it's 80,000. And therefore, why should I invest anywhere else? I'll just keep buying gold, and I also enjoy. So, so as long as you're buying the gold for enjoyment, that's fine. But if you think that enjoyment is investment, then it's the incorrect, because the whole definition of investment is that you should be able to liquidate it when there is a need. Okay.
True.
And you are not going to sell your gold if you want to travel, or if you want to buy a new house, or if you want to buy a new car. So if you're not selling that asset, or you're not willing to sell that asset, then it's not an investment, it's an expense.
Correct. So maybe a deception to tell yourself that it's
that's
an
right.
investment.
So it's and that's why a large proportion of your investments have to be in places where there is no emotional attachment. When you buy a flat, there is an emotional attachment. They buy a land, there is emotional. In financial assets, you can't have an emotional attachment.
Right.
If you put a bank deposit, you are not going to keep that bank deposit because branch manager is a friend of yours. If you need it, you are going to withdraw,
Fair
or
enough.
it's the same as with equities or anything else which is liquid.
So how liquid is Dr. Gupta's portfolio now?
So now I think over a period of time now, after I think 2014, so we are almost 10, 11 years out now. And I think now his portfolio has more tilted towards liquid, maybe 50-50, because I don't know the total size of his, land assets and all that he had. And obviously he's not going to tell that to me. So because of obvious reasons. But I think it is more now financial assets. More importantly, every incremental rupee is now getting into liquid investments, and that is very important,
Fair.
So in fact, just 2 weeks back, he WhatsApped me that now have I think he has some 14 odd crores of wealth now. And this is only through SIPs,
Only
SIPs.
SIPs.
And he started with 50,000 rupees. I think now they are doing around 10 lakh rupees a month.
Wow.
Husband and wife put together. So around 14 crore. So he's asking me this question: where will this wealth be 20 years down the line? Or I think he said 15 years down the line. Where will this wealth be? And I did some numbers and whatever, and I said it's going to be somewhere around 150 to 170 crores. I think he was very glad to hear that number. And people can't. Another thing that I've noticed is that people can't visualize that their wealth is a 15 crore portfolio in 15 years' time will become 150 crores.
Absolutely.
They can't visualize.
So is this visualization of future or numbers also resulting in too much tracking from the investor's end, and is it a headache?
So no, that's the negative part of liquid portfolio, okay? Because liquid portfolio, the price is available every day.
Correct.
Okay. If you have a bank deposit, you know that you are earning 8% interest. Bank will send you a monthly statement of interest accrued and this and that. If you have equity, every day there is share price available. So because there is a price available, you end up looking at that price. And nowadays modern technology, there are apps, like we have an app on which our clients can track their portfolios. So every day you just open the app, what has been the market, kitna mera portfolio aaj badha hai, or kam hua hai. So I think that happens. But I think obviously if somebody is getting worried, and people do tend to get worried, and one of the reasons why they get worried is because they look at absolute amounts, So like this 14 crore, which is today, I think in September would have been 15, 16 crore. I'm just estimating. Correct. 15 crore. Okay. And then that 15 crore came down by 15% in February. So in a matter of 6 months, that portfolio had lost 2.25 crores. Now he's not talking about 15% or 14%. He didn't count his eggs when the market was going up. When in the previous 1 year, that money had grown at 35%,
Fair.
And which is basically his portfolio from 10 crore went to 15, 16 crores. That he didn't count.
Of course.
But when it falls by 2.25, he counts. So daily calculation कि अरे मेरा 2.25 crore का नुकसान हो गया. What are you doing? What is happening? This fund is not even beating the market. And so those kind of market has fallen only 10%. Why is this my portfolio down 11% or whatever? Market has already come up 10%. My portfolio is only up 9% or 11%. So, those questions start coming in because you are tracking daily. But I think that's a good problem to have. Okay, where and as long as you are not taking some drastic decisions.
Fair.
So if you panic and get out, okay, this guy is telling all the stories and I'm losing 2.25, and then what if this 2.25 become 5 or 6 or 7? All my gains will be lost. So let me get out before it's too late.
Correct.
And a lot of people panic, during these falling markets, whenever the fall happens. But you don't know when it will stop.
True.
Okay, so as long as you are not taking that drastic decision, I think it only improves your learning. Okay, gradually over a period of time, you start realizing there is futile to worry about these things, because these are just too out of control things, and too short term. Okay.
Fair.
So like in February, markets was testing lows, and now it's testing all-time highs. And between Feb and July, how much time? March, April, May, June, 4 months, just 4 months. And
Fair.
the markets are so back to wherever they were. So so just let's think about somebody who was overly worried in February. He'll be thinking, "Arey, why was I doing that?"
Correct. So now moving on to his portfolio, how has Dr. Gupta's portfolio evolved, and has it also been built to create a legacy for him?
So first of all, any portfolio, once it crosses a certain size, and when you know that, okay, I'm not going to consume this much money in my lifetime. Okay, anyway, you are building a legacy. And in the global world, because you don't even know where your children are going to be, 5 years, 10 years, 20 years down the line. As I said, he comes from a small town. Very little chance that his children are going to basically get employed there.
Fair.
And both his children are not becoming doctors in any case. So in any case, there is no legacy in the hospital that he's running. So when your children are not even staying close to where you stay, and then for them having a formal portfolio of things, which is equity or fixed income or anything else, becomes far easier to pass on the legacy than physical assets. Because physical assets come with their attendant issues. Where are they located? What's the price? And how do you manage to ring fence those assets? You keep hearing about stories about illegal possessions and all that, and it can happen to anybody.
Correct.
And these are real stories. We may say that whatever, but living in urban centers, you don't know what is happening in the hinterland.
Sure. So, just closing this discussion, what are the top 3 learnings that you could share with our viewers with respect to Dr. Gupta's journey?
First is that, anyway, I think seeing is believing. So I think once you are experiencing also creates belief. Okay, so once you start on this journey of creating a financial portfolio, you will get hooked onto it. Okay, and I tell this to every businessman, every professional, especially businessmen, because they have this tendency that I can earn 30% ROI, return on investments on my capital. Why should I invest into stocks which can give me 12, 13%, 14%? I'm actually making a loss. And logically, yes. But if all your capital is invested into the business in all points in time, then what's the wealth that you have created? Because you are not going to sell that business to recover your wealth.
Fair.
If your business is worth 100 crore and you need 5 crore, how do you get that 5 crore? You can't sell 5% of a small business. Either you sell completely or you are without 5 crore. Okay, so and this happens with most businessmen, and so for them it is very important that in good times keep taking out some money.
Okay.
Give yourself a handsome salary. Look at yourself as the first employee of the company, you know. Most businessmen will pay very low salaries to themselves. Ki, "Arey, who will pay 30% tax? Business to I can show expenses and whatever and manage the tax. Or I can show depreciation, I can buy new assets, I can, you know, anyway, corporate tax is now 25%, you know, whereas maximum tax for individuals is, I think, 37-38%. So there's this all the time, this kind of dilemma, you know, that why should I take higher income? But I think reward yourself, take our income and then keep and invest that money gradually so that you create a portfolio outside your business. And same is for professionals, you know, and what were professionals, as long as they are capable, and there could be so many things which can maybe affect their profession. Okay, for a lawyer, for an architect, for a doctor, you know, some life event which is serious can end their practice. So when the times are good, actually creating a good financial portfolio, whatever that size, depending on the nature of the business you are in and your income profile, you can do. But everybody should have that. So that's, I think, the first thing that I would say. Second, as I mentioned, 70 rupees becomes 100 rupees in 3 to 4 years time. So don't shy away from paying taxes. Okay, and it is good. It helps the country. You know, our tax to GDP in India is just 12%. I think not even 12, 11%. Okay. In US, it's 28%. So when you go to US and you wonder, अरे यहाँ तो infrastructure इतना बढ़िया, हमारे यहाँ कुछ नहीं है, सरकार कुछ नहीं कर रही है. सरकार के पास टैक्स ही नहीं आएगा तो सरकार क्या करेगी? आप सरकार को 28% देके दिखा दो, देखो इंडिया भी US बन जाएगा. You know, so that people have to realize that to create a country which is modern, which is developed, it requires a lot of money. And that can only happen when everybody is paying taxes. So you are actually doing a social good by paying taxes, as well as making sure that your life becomes easier. Investing in a property is far more difficult than investing in stocks.
Sure.
People think otherwise.
Correct.
Okay. Because there's 100 ways in which that property transaction can go wrong. And there is just no way your equity transaction can go wrong as long as you are taking help of professionals, you know, or you have the skills to do it yourself.
Fair enough. Wonderful. Anything else that you would like to share from this story?
I think these are the two big learnings, and obviously, if you have a good guide, and that is something that, in any case, I think people should always have, you know, because the journey of wealth management is a very long one, you know. As long as you are alive, you are going to have wealth, and you'll need management of wealth. And it's very, very few people who can do it themselves, you know.
Of course.
I'm just coming from a friend's office nearby, you know, and he's an individual investor, worked in a broking firm, manages a large portfolio of his own, qualified. But he also doesn't work alone. There were 5 other friends of his who were working, sitting in that office, all individual investors, but still sharing space, sharing knowledge, sharing ideas. So if you have to do money management on your own, very few people can do. Everybody else should have a good wealth manager. You know, and there are enough and more in India, in every corner of the country. So have a good wealth manager along with the other 2 things.
Lovely. Perfect. Thank you so much. It was a very interesting and lovely story about Dr. Gupta.
Yeah, thank you so much, Upasana. I also love sharing these stories.
I'm hoping that our viewers are able to take away some tips and tidbits about, you know, this entire story and the journey of wealth creation. And what was most interesting was the ability to enjoy your wealth. If you can't do that, you're actually not creating wealth for yourself. So that was extremely interesting. And for our viewers, thank you so much for watching. And do watch out this space for more interesting real life stories. And we would definitely want to know from you in the comment section on what you would like to hear more about, or any views, comments, suggestions, or questions about the topic that we discussed today. Thank you so much for joining us.